Well, there's a lot of anticipation this weekend with a lot of people wondering how the market will open this week. So what I decided to do for today's video was I actually reached out to you guys on my Twitter and I asked, what is it that you want to know the most for this week so that I can try and cover as many of your questions as possible. This week, just to let you know, I am heading away in the morning and I will be out of action for a week. So I'm not sure when I will be able to do my next market update. So the goal of today's video is to try to give you enough to get through enough time until I can get back on YouTube again. Now, before I get into your questions, if you're not following me on X, make sure you do that because I do tend to travel a lot. And when I am traveling, I can do really quick updates on X, but it's not that easy to get on YouTube to make long form content. So in the description of this video is a link to my X account. Just make sure you grab it from there. Don't go to X directly and search for me because there's a lot of fake accounts. Now, if you're new here, welcome. And if you are returning, welcome back. I'm Annie and this is Trade Travel Chill. If you're not already subscribed, be sure to do that so you can be notified every time I upload a new video. And while you're down there, hit the like button as well. Now let's get into some of the questions that you guys asked me over on X. There was a lot of stuff, so I'm gonna have to speed through this as much as possible and I'll try to get through as many things as I can. First of all, we have obviously I'm not an insider trader. Like I wish I could have the power to move the price of Bitcoin, which is what I mostly talk about. Stupid comment, obviously a troll. But moving on from that, we've got a request to cover ETH and ETH BTC. I will do that. There was a lot of questions about 𝗬𝗍. I've already covered that in a couple of videos ago. I said I don't own 𝗬𝗍, so what is going on with them doesn't affect me and I will trade it however. So I'm happy to trade it as a futures trade, which doesn't give me any exposure to 𝗬𝗍 anyway. If you didn't catch Pedro's video yesterday, be sure to catch that. It's on this channel. He covered 𝗬𝗍 because he was a holder of it and he has an opinion about it. I'm not going to give it away, but check out that video and then you can make your own mind up what you want to do if you're a holder of 𝗬𝗍 yourself. Questions about the false move week beginning. I'm going to get into that first. There's also lots of altcoin requests here. There's questions about the UK market. Now, with this one, we actually have to be careful because this week we actually have bank holidays both in UK and we also have US bank holiday as well. So that means the only open market on Monday this week is Asia. So for that very reason alone, we may have an unexpected week. And if Asia actually runs a trend instead of just consolidating, then that's going to make it tricky to trade because the other markets are technically closed. Now, does that mean there's no trading for these two sessions? Not at all. If there is a trade setup, my advice is take the trade setup. You know, as long as it meets your rules and it meets your minimum risk to reward, take the trade regardless of whether or not it's a bank holiday. The only reason I point out that there are bank holidays is because sometimes that can change the session behaviors. Thoughts on BTC? Yep, I'm going to get into that now. I'm going to cover the USDT dominance, how the stock market closed, all the normal stuff that I do. Let's talk about Bitcoin first. On the daily time frame, we can see here that at the end of last week, we tapped into my liquidity zone. That was between 111 to 114K. At this point in time, we've rejected from there and it looks like we may be attempting to cross down below the 10 EMA right now. That's still bullish. That doesn't worry me at all. You can see here that the 10 EMA acted as support here. It also acted as support here. It's extremely bullish when the 10 EMA is acting as support. However, in saying that, even though it held through here, it should, because this was our 3 hits to the upside that makes the level. That doesn't mean it's going to continue to hold that 10 EMA and be extremely bullish. To me, it kind of looks like we're due for a little bit of a pullback anyway. As long as the pullback creates a higher low, then I'm not too worried about that. I'm still very much macro bullish. So what I would be looking for if we do end up breaking below the daily 10 EMA, I'm going to look to see if it holds the 20 first. If it breaks below that, then the 50. And the reason for the 50 is it lines up with this vector here currently. By the time it actually gets to that daily 50 EMA, it'll be around halfway of this vector here. So this is the halfway of that vector. It's about 100,630. So if we trickle down in a retrace, a 50 EMA will come and do something like that. And then price might do something like that. 100K-ish retest would still be bullish to me, providing we hold there. And consider that a range. So not exactly 100K, but a couple grand either side would be a good retest area. And I would still be bullish on it as long as we held that zone, created that zone as support. Then I'll expect that we're going to have a further move to the upside from there. So if at any point Bitcoin does pull back to this area, that wouldn't make me worried. I would just consider it a retest of the current trend and it's a due retest anyway. Now let's look at the 1 hour time frame to see what's been happening over the weekend. Now I put a video out on Friday where I talked about some potential altcoin retest zones. Some of them price, last I looked, price did settle in those zones, and some of them price went lower, which I mentioned on that video. If price goes lower, that's an invalidation. Don't get involved. I also just want to give you a bit of an update, because in that video I mentioned either getting the pullback on the weekend to give us the entry for further upside next week, or we continue to rally with retail FOMO this weekend and then we get the pullback next week. Now, something unexpected happened right as I posted that video. That's what happens when you're a technical analyst. The markets move when they want to move. But what happened right after I posted that video was this drop through here, which actually happened on Friday. So it sort of invalidated my hope for the weekend, because whilst I was expecting or wanting a pullback, the pullback happened at the wrong time. And that's why trading is very much, and this is really, really hard to get across on YouTube, but trading is very much not just about technical analysis, but also timing. You have moves that you expect to happen at certain times. To give you a very fast overview, if you've never heard this before, the markets are broken up into session times, and those session times come from CME futures. Now, we mostly follow those times on this channel. Even though crypto is 24/7, you will find that most of the volume comes in line with those session times. Outside of those session times, you tend to have low volume, or you tend to get a lot of stop hunts and short time frame volatility that comes from whales, because whales can really only manipulate the market when the big institutions are basically off duty, which is what we consider them outside of the CME times. So the major sessions are Asia, UK, and US, and they all have a job to do. Asia's job runs a consolidation. It sets the high and the low of the day. UK's job is to run a slow trend. And then the US brings the volatility, and depending on where we are in the model, which is too much for me to get into in this video, but depending on where we are, the US will either reverse the trend that the UK did, or it will continue it. Now, you have to learn the model in deep detail to understand the likelihood of day to day what the US session is going to do in relation to what UK and Asia did prior in that day. But the point being, when it comes to Friday, a trap gets set either in the UK or the US session, and the trap is designed to get traders to FOMO into an open position. And then on the weekend, we tend to just consolidate sideways with very low volume. And the point of that is so that by going sideways, the traders who did open their position on Friday, it either doesn't hit their take profit, so they don't close the trade, or it goes a little bit against them, but they're not too deep in loss. So they keep holding onto the trade, hoping that that will either eventually be right, or it will come back to their entry and they can get out at break even. And so that's why price just goes sideways. It just kind of, it's basically teasing you the whole weekend so that you keep your position opened. And that trap usually, as I said, gets set either in UK or the US session. So the reason why I'm telling you this is because we can see that that happened here. Now, I know you're going to say, oh, that's because Trump said the thing about UK tariffs and blah, blah, blah. Yeah, like usually the news is the reason for the trap. Okay, so I'm not disputing that there was an announcement that happened that caused that move, but also conveniently timed, it happened right when it's meant to happen, right here at the end of the UK session. That's exactly when we expect it to happen. Because that happened, and it happened right after my video was posted, and I did do an update on Twitter about this. So again, you know, when something changes from a video that I've done, I will try to, I mean, look, I'm going to be honest with you. If you really want to stay up to date minute by minute with what's going on, the best place for you to do that is to get yourself into Trade Travel Chill. Like if you've been watching this channel for a long time and you are a believer in what we do and you see that, look, most of the time we're pretty accurate, then I don't know why you don't want access to that on a more regular basis. So step number one is just get yourself inside Trade Travel Chill. You'll get access to our Discord where not just me, but my whole team are doing updates every single session. So that's 3 times a day during the week, that when something suddenly happens, like what happened right over here, you know, instead of going to figure out which social media I may have posted on about it, it's right there in one place and easy for you to find. So consider that. But second of all, it's important to be following me on X, because when things do something unexpected that I have just spoken about on YouTube, I do try my best to do a post to just let you know that something may have changed. So that's what I did here when I saw that move. I said a lot of the altcoins that I covered on YouTube have entered the retest zone. I wasn't expecting it to happen so soon, but from here, I think it's best to wait for price to settle and see if the US session brings in buyers before reacting. So now let's talk about that. So this was the initial move that caused me to change my opinion and say, okay, just wait. Initially, it was looking great. A lot of the alts that I had covered had a wick like this into the zone and it looked good. I did take a chance on some of them, but with much lower risk than I normally do because I wasn't 100% sure. And usually when you have a wick like that, price will come back and return to the zone and give you a second chance to get into the trade. Now, when it did come back in this instant, I'm showing you on Bitcoin, but you'll see it later when I chart the altcoins that I spoke about on that video. It created a lower low, which is a risk to enter the trade. That lower low on some of them stayed in the zone. So what's happened since then is Bitcoin gave the lower low. Now we're in the weekend trap where you can see that there's low volume. There's not really a trend. We're kind of just hanging around and you can see price is just really in this weekend range here. When we have a look at the liquidity that is currently available, there's tons of liquidity above and below price. Obviously, I've got my big zone marked that is above price that we attempted to enter. We haven't made it all the way through yet. That is still sitting there, but the higher levels of liquidity are actually below price. So it is possible at this point in time that this drop here started drop level 1 and we may go in next week completing those. So there may be 2 more drops to come. And look, the first one may take out this level. The second one may come and take out this level down here. So what we're actually looking for next week is somewhere around the 105K region, so 105 to 106. We're looking to see if we get a second drop into there. And if we do, and we don't get a strong bounce out of it, then our focus is going to turn to the 103K region. If that were to happen, that would invalidate all of the setups from my last video. But when I zoom out, I still don't see that as a problem because both of these zones come into high vector candle areas and there really is just a retest. We are currently below the 1 hour time frame 200 EMA. So a reclaim of that would be bullish. So we don't really want to drop too much lower than this. So if I was to think, okay, we're not going to get 3 drops, I want to see the 200 EMA reclaimed, retested as support and hold as support, and then see price start to make its way up at least to the 50. That's going to be its next obstacle to then break above the 50 and then obviously go on to change market structure, get back above the weekend high, come back into this vector candle here and then make its way up to all of this. But look, for a healthy market, I actually am preferring the option of a deeper pullback. What I can tell you is that neither scenario would cause panic to me. And I think that's the main thing. I think if we came down to either of these 2 zones, as long as we saw strong bounces out of them, I'm still bullish. Bitcoin dominance disappointed me a little bit. It was looking like we were going to have a lower high formed, and this candle here, the last time I covered it wasn't a hammer because it was still open and it was looking like it may close as a bearish candle, but it actually closes a fairly bullish looking hammer off the 50 EMA, and that's not ideal because Bitcoin dominance on the daily loves the 50 EMA as support, and so it sometimes has brief drops below it, but once it reclaims it, it just continues up to new highs. So I don't like that, just being honest. If we want alt season, I mean, it's great if you've got a lot of Bitcoin and you're still stacking your Bitcoin and Bitcoin to the moon, it's great for that, but it's not great for those who are wanting alt season right now. We do still have this vector right here and we haven't reclaimed that yet. So that is definitely our area of interest right now. If we start to push up into this zone, then yeah, we could be going up into this higher zone next, which is at about the 68 to 71% area. And if that's it, it just means it's not alt season yet. It's still time to only focus on Bitcoin. The other reason why I'm not particularly worried is because of the actually total minus stable coins. This is still in the process of doing this 50 EMA retest, 5200. So right now it's really just consolidating and creating a support. It does look a little bit like an M formation, so that is a little bit of a problem. We just want to make sure that it actually holds the zone. So this has been my zone the entire time. We spiked into it a little bit. We haven't come too far into it, so there's hope there. It's possible that this is just consolidating. It is also possible that it's an M. We need to see how price reacts if it does in fact come into this, not price. We need to see how this reacts as we come actually into the zone. As long as we're holding the 250 as support, I'm not worried. If we break below them, then yeah, watch out for your alts. Now, stablecoin dominance, someone asked me to look at as well, and the comment was that it looks bullish. To me, it's not bullish. It's still in its downtrend. I understand why there was a little bit of volume here because it's coming back to test a prior support. So that's all that is. At this point in time, it's still a lower high. It's still under the 250 EMA. Just looking for that weakness to continue and head further down, then there'll be nothing to worry about. The only time I would start to think, oh, we're turning risk off is if the stablecoin dominance starts to get back above the 50 and 200 EMA. All right, so with that in mind, let's go and have a look at ETH. I want to first have a look at ETH BTC. Now, this is my prior analysis and nothing really has changed since a long time ago. But when you really zoom out on ETH BTC here, you can see that we have this long-term downtrend. We basically have just come back to it and we're really just creating another touch to it, to be honest with you, which is not great. However, for early movers, what we need to see there is a higher low. So we're just consolidating in the area. You know, there's really not much for me to tell you. As long as it's above the 50 EMA, we have a chance of it breaking out next. If it drops below the 50 EMA, just start preparing for everything to roll over, and it's not time for ETH BTC to break out. And yeah, I know that's not what ETH holders want to hear, but it is what it is. Until we actually break out of this trend and change the structure, it's really 50-50 right now. The consolidation is good. At least it's not breaking down. The main thing is that we hold around the daily time frame 50 EMA. Okay, so then that takes me to ETH USDT, where we can see we have spiked into my liquidity zone a couple of times. Again, I'm still on the daily time frame. Looks like we want to drop the 10 EMA now. We may hold the 20, but even if ETH comes back to the 50, which is at about 2100, that's not a problem. It would just be a full recovery of this vector and it will be taking out this liquidity here. It may leave behind the next one lower, but if it's super bearish, then that's what we're looking at next, which is between 1960 to 2165. Either of them, again, as long as that's the worst damage that happens, wouldn't be an issue in my mind as long as they created higher lows there, because either of these two areas are just going to be a pullback to a key level, to a vector zone, potentially to retest the prior resistance and flip it into support. Anywhere around here could still be higher time frame bullish for ETH. Doesn't look great that it's an M formation under my top liquidity zone, but again, it's currently just consolidating, and that consolidation could lead to a breakout to the upside without this breaking down. So the key here is to make sure that ETH continues to hold the 200 EMA as support. If it maintains the 200 EMA, then it's probably going to leave them behind and we're coming for this next. In that case, we would be bullish. Okay, now I'm just going to go through some of your requests. And to be honest, if these charts have markings on them already, they're not fresh. They're old markings, and I actually can't remember when I did them. I either did them for the Discord or I've done them on YouTube. So I'm really just going over to see if my analysis that's on them is still valid. And what I'm seeing with Ethena right now is this prior setup is currently still valid. This was around the ideal sort of entry somewhere in this range, which is where the price is now, but there isn't a reason to enter because there isn't a bullish candle close on it. Now that I'm jogging my own memory, I think I remember what I said was that if it came down to this zone, that would be an aggressive entry, but I'm personally not interested because there's been many times it couldn't get above this level. And for me, I would want to see it actually break past the 200 EMA, then come back to retest it. And that's where I'd prefer to get involved, even if it was at a higher price. But the reason for that is because then I'm sure that it's broken out of this range and it's actually bullish. So the two prior setups are still relevant for me on this. And if it drops below that level, which is about 0.33, then this setup is invalidated and I wouldn't really get involved at all. Now I'm going to try and move through this really fast because there really was a lot of altcoin requests and it's hard to get through them all. So with Solana, same thing. I'm seeing the M formation. It doesn't look great. Look, these M formations here, they look like they're setting up for a retrace. They really do. That's the downside, okay? The upside is that they're still above the 50 EMA. So it could be that they're setting up just to retrace to the 50 EMA, especially if that EMA lines up with a previous vector. That's where I would personally be looking for entries if we could come back into those zones. But if you don't get that final bullish confirmation, like I just showed you with Ethena, just don't get involved yet because it really is 50-50, especially when you look at the ETH BTC chart showing that, you know, there's still a chance ETH BTC breaks down further from here. No one wants to hear that, but there's still a chance, and that might take everything else with it. Plus the Bitcoin dominance might break up to another high. So we saw where it is right now. I really would only be interested in buying the dip on Sol. I'm not actually buying the dip on Sol. I just want to be clear, but I'm just telling you what I would do if I wanted to buy it. But somewhere around the 50% mark of this vector right here is also around the 50 EMA. So around 155 is a good buy on Sol for me, providing we get that final candle confirmation if we actually end up in that zone. But at the same time, like I said, it's currently consolidating, so you can't bank on pullbacks. Consolidations can easily break out to the upside as well once the job is done in that consolidating zone. So if we don't pull back, then again, I wouldn't be buying in the range unless I got really bullish candles on these EMAs, just because of 200 in the, I'm not being fast at all, am I? I am taking so much time. Anyway, I'm going to try and move through it. But I just got too much to tell you that's really important. So so I can't, this is going to be a long video. Just deal with it anyway. And please watch the whole thing because I'm doing my best. But these two EMAs here are acting as the support. So if we got a really bullish candle into them, like a spike like this, but it came with a high volume candle, it could be a good buy off the consolidation. And it could be that that's the best you're going to get. Say it just like spikes down like this, and then, you know, it just goes and breaks out. So yeah, be open to that. So your options are to take the chance on a candle like that if you get it, wait for the pullback, see how it acts at the 50 EMA, or wait for it to actually break out where you'll feel a bit more certain and then get in on the retest. All right, XLM is, I think it's on the verge of not being something that I would be interested to trade. Yeah, it's very close. So I personally, when I'm looking for retracements into high volume vector candles like this, I don't really like taking the trade if the price comes back to more than halfway of it. It is possible that a retrace comes back to the very bottom of it. That is possible, and then it bounces and moves out. But for me personally, I prefer them to bounce off the halfway mark. So this is very close. This candle here did exactly that, and currently looks like this candle wants to return to it. So if it holds that level, which is at 0.275, then that could be a good buy. It does look like it's a bull flag currently, but it needs to hold it. And if it holds it, then I'd get involved. If it doesn't and it breaks down further, I would just be hands off and wait to see what it does next. All right, Doge looks like it has broken out and it's currently retesting. Again, it's an M formation. It doesn't look good on the daily. Could that M formation just lead to consolidation? Yes, it could, but it's very close and looks like it does want to break down below that consolidation. 50 EMA is going to be the key on this as well. Your area of interest, if it does break down out of that zone, is going to be this vector candle here. And so that puts it between 0.19 to 0.21. See if you can get a strong bounce out of there. But if it came back too much lower, even though we have this vector here, I would just want to be a little bit more cautious. This last chance entry for this would be a retest of around halfway mark of that. But I would say if we pull back that far, there's probably something going on at the time that is not bullish news. As I mentioned to you earlier, it's all about the pattern, the timing, and the levels. So the timing, if it comes into that zone, is what we need to check for as well. Oh, this doesn't look good. Link has given a lower high off this very important EQ zone here. So it attempted to get through it, came back, but on the next breakthrough, it didn't get back into the zone. That's not positive. This doesn't look great right now. And when you draw it out like this, it's another touch to the downwards trend line. So yeah, Damn it. I really want alt season, but this doesn't look great right now. So worst case scenario, if we're not going to turn mega bearish, then again, we need to hold in this vector zone, which is in right now. The spikes here did come into halfway. The candle looks like it wants to return unless it turns around with another wick soon. It's going to be hands off for now and a little bit more wait and see time. Look, as I'm filming this, there's still 12 hours of the daily candle to go. So anything can happen in 12 hours. It's going to be more important that you take everything I say from this video and re-look at it tomorrow after the daily candle has closed and see if you have those wicks on any of these things. Then it's like game on, get involved, be bullish, get your entries. But if they close below, it's sit out a little bit longer and prepare for a deeper pullback. The graph, so it's broken below. This must have been my area of interest from another video. I actually think it was from a 4-hour time frame area of interest. So it's broken below, so that's no good. But then when you look at the daily, it's coming back to retest a prior resistance and also this trend line. So again, very same thing here. It depends on tomorrow's daily candle close. If it can hold around this area, look, I wouldn't even mind if today it spiked down, right, and gave us something like this or like this, but then closed back up, you know, as a hammer. That's fine. Let it do that today. I don't care. As long as the daily candle closes back up above the zone, back up above this resistance here, then that would be the third touch to this trend line, which would be bullish. And then you could get involved and expect it to break out next. So it really depends on how today's daily candle closes on that one. All right, let me check how I'm going with these questions so we can have a TA break and talk about maybe something a little bit different. Tell us about the moment you realized that crypto was changing your life. That might be a subject for another video. Dominance, do I think it will go to 70%? It's still very possible. 𝗬𝗍, as I told you, Pedro covered that on a video yesterday. It's only a 5-minute video, so make some time to watch it. What's the possibility of 113k BTC? I don't know if that will happen this week, but I think we'll get there eventually. It's just a matter of time. And I think from this point on, any retracements, any liquidation hunts, anything like that, they're all buy the dip opportunities for now. Can you please share your thoughts on when will be the end of the bull market? When's the time to sell altcoins? Are you keeping some? I might do that as a whole separate video because it will take too long. Love your videos on YouTube. Gives me hope as the steps ahead are not clear. Yeah, it's really not an easy cycle, this cycle. I tell you that for sure. Please keep posting. I have no idea how much it helps. Janet, in your videos, would love to know what steps I can take to trade and make profits. Do our course, get in our community. I don't know what else to say, but that's where it's all happening. Is the momentum swinging down like the S&P? All right, let's take a quick look at the S&P. So for me personally, I know people are really worried about this because we have a trend line break. Yes, true. Just to be clear, in case you're watching me for the first time, I don't trade trend lines. I mark them out to know what retail would be thinking, but trend lines are not part of my personal trading strategy. Look where we got our W formation, was all the way back here. For a long position, yeah, you should take profit. You should probably also swing short. When I look at the current price action, why I say you should swing short is because we broke the 50 EMA, we consolidated under it, we're making an attempt for the 200 EMA. That is my exact trading strategy, right? These are the things that I look for. So if we can't hold the 200 EMA, then we would expect that we're going to break down even further. But there is a caution here. If I zoom out on the daily time frame, look at this. The S&P loves the 200 EMA, okay? It holds it as support many times. After it breaks the 50, it does hold the 200 as support many times. And you can go back in time and you can see that it tends to love the 200 EMA. Over here, we knew to flip bearish because of the 3 hits to the same level. It's part of our trading strategy. It did break down from there. And then on the lower time frame, we saw the W formation that I just showed you here, which was the time to flip bullish again on it. Now, the problem with what has happened now is that this here is a lower high after these 3 hits to the high. And that can be extremely bearish, especially because it came back to this vector candle zone. The thing is that whilst the S&P and Bitcoin are usually correlated, they're not always 100% correlated. So whilst the S&P was pulling back for the last week or so, Bitcoin was rallying. So I don't want you to think that if the S&P is going down, then Bitcoin has to go down with it. There could be a reason why the big money is shifting into Bitcoin in anticipation of its stock market coming down further. I'm not saying that is what is happening, but it could be what's happening. So treat them independently right now is my opinion. There are times where they're very heavily correlated and you have to pay attention. And then there are other times where they kind of fall out of alignment and you can just trade what you see on each one. So it's always good practice to chart them every day. 100%. That is amazing practice to do that. But if you see that they're kind of fallen out of alignment, just trade what you see on the individual asset for what it is. If Bitcoin feels extremely bullish and the S&P doesn't, just trade what you see. And the best thing you can do is keep your stop losses, keep moving them up, keep protecting your trades and keep protecting your profits. Then that way, if eventually the S&P drops hard and it does affect crypto, then it's only going to hit your stop losses that are in profit anyway, and you don't give back everything that you've made so far. Now, if I missed any of the alts that you requested on that X post, the thesis is basically the same. When you have a look at the daily time frame, a lot of them do look like potential M formations or they're in a consolidation above the EMAs, and the vector candle is pretty easy to identify as your target. So keep alert as the market opens tomorrow. Check how the daily candle closes for today, and then you should be able to make your decisions from there.